Join us now, Sylvia Jablonski, Defiance ETF CEO and Chief Investment Officer. I'm feeling you have not been that negative.
No.
Throughout all this. I can remember it's sad because I look at some people and I remember how wrong they were.
Yeah.
And we have a lot of people on that when I look at now, that's all I can think about. And I'm not sure why they're here.
I'm glad I'm not one of them for
You're
today.
not one of them. You are not one of them. Why didn't you? It wasn't a head fake. I mean, there are real concerns and worries that people saw, but obviously the market is seeing through something. What's the market seeing that most stock analysts did not see?
Well, I mean, I think that there's a lot to it. So first of all, the macro backdrop is good, right? You have job numbers are pretty good. There's $7 trillion of cash on the sidelines. The market is ripping up. Corporate earnings have held up against, popular belief that eventually we would see that softening. Inflation is starting to come down. Things are looking good. But in terms of tariffs, you go back to Liberation Day, the market just completely crashed. And then we've had so much back and forth, hot and cold, the art of the deal, that I think the markets have just become a little bit insensitive to these conversations. And I think the belief is that, here we are again trying to force the hand till August 1st, but there could be carve-outs, there could be other negotiations, there could be changes to all of this. So I think it's kind of much ado about nothing until there is an actual policy that's enacted.
The reaction is non-existent.
It's muted.
Right?
Absolutely.
You can say, okay, the futures are a little weaker, but not really. This is like any given day.
Right off.
Right.
Highs.
It's like any given day. And so is the S&P, by the way. We're at 6% plus. That's kind of an annualized average return over the last 100 years. It's a pretty steady market.
Did we miss all the stuff that people were so excited about initially? Deregulation, maybe less antitrust concerns, and tax certainty for corporations, and expensing of equipment for people that, and then all of that was supposedly canceled out by these awful tariffs, which either didn't go in or weren't as bad as people thought.
Yeah, and if you think about the tariffs as well, there's sort of two sides here. The first side is that this whole thing, negotiations fail and tariffs go into place. All of a sudden, we have revenues to pay for the tax cuts, and perhaps that is treated as a success. And on the other hand, if there's a negotiation that is laid, then markets are happy because we have stability and peace in the world. But all of these things will take time to play out. I'm not sort of Pollyanna that this will never impact the consumer at the end of the day, because tariffs will, but it takes time to show up in the data.
So many people think that we can't just cut spending, that we need to raise revenue somehow. Tariffs, it might be regressive, but either corporations are paying or customers are paying, but there's money coming into the till from something. And if corporations bring some stuff back here or find ways to lessen the impact of tariffs, and if maybe consumers pay, I don't know. There is real money. A lot of people think higher taxes is the answer, but they hate tariffs anyway. You could make the case, if it wasn't regressive, that this is not a horrible way to generate some revenue from corporations and individuals.
Right, and so far it hasn't proven to be so bad. We have seen some of those revenues coming in. Markets are holding up. The economy is holding up. And so we need something to take a wild turn left.
What's going to throw us off here? Could it be a bad earnings season, or could it be hot CPI numbers tomorrow? Could it be finally a crack in the labor markets, which we haven't seen? What's most likely? I
think so. We've had 4 softer than expected inflation reads, right? So this next one in June is expected to pick up a little bit. So if it's a lot higher than expected, maybe that throws the market off a little bit. If jobs start to soften further, maybe that throws the market off a little bit. But I just don't think we're there. Again, trillions of dollars on the sidelines. I think corporate earnings are going to be good. I think that AI is going to propel them forward going, into the next couple of years.
Also the wild card, AI, just those 2 letters.
Right.
Either it is the wild card or it's not.
But here's my tariff question. I know we saw the Goldman Sachs report last week said that and this is interesting if true, that only 40% of the tariffs, if they are implemented, get borne effectively by the American consumer and or American business. Effectively, that 60% of the tariff gets borne back at the foreign side of things. I don't know if that's true or not. The question is, what do you think the real estimate is? That I don't know if you agree with Goldman Sachs. You think someone's got a better way to think about it.
Yeah, I don't know what the exact numbers come down to, but I tend to lean towards Goldman Sachs, and I think that even strengthens the president's position to negotiate here, because actually it feels like it might be worse for the EU than it would be for us, right? And so I think that also gives him some power in his negotiations there.
Okay.
You don't have price targets, really, do you, for the S&P?
I think,
I wouldn't do it.
Yeah, right.
If I were you.
It's a crap shot. I mean, I'm bullish on the S&P. I think the market's going to end up
Is
this
it a
year.
crap shot or a crap shoot?
Crap shoot.
Oh, okay. Because I'm trying to think of, there's a way I can think of what a crap shot is.
I can think of
If I shoot a basketball, it's usually a crap. What do you think of? Something gross?
Oh, I was thinking the same thing.
Okay. You're thinking the same. But higher than where we are now by the end of the year?
I think a little higher than we are now. I think we get closer to that, 10% for the year on the S&P 500. I think NASDAQ will rally quite a bit more here. You're seeing it in NVIDIA, you're seeing it in quantum stocks, some things like this. And then I think you'll get some breakout in other areas of the market, like drones, cybersecurity, things like this, just given what's going on in the world.
So as all of your peers were negative, were you just defiant? Is that how you would describe yourself as a?
Absolutely.
What's the name of the firm? Defiance.
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 Defiance is the name of the firm.
So you
So
just
we have to be a little defiant.
You were defiant.
Yeah, we're positive on the U.S. economy, positive on equities.
All right. You're in studio today.
Yes.
I just realized that.
Yes.
Thanks.